Hello everyone, today is Tuesday, September 22nd, 2020. My name is Evan. Welcome back to another midweek stock market analysis video. Let's dive right into our technicals dashboard. Zoom in a little bit here. You can see stocks on this Tuesday rebounded nicely, green across the board. The Dow, the SPY, the IWM all up about 0.5% to 1%. Nasdaq 100 up almost 2% on the day. So this has been the underperformer, sort of dragging everything down with it the past 2 weeks. Throughout this sell-off, this pullback, and you're seeing a little more of a sort of mean reversion type of move here, where big cap tech is getting that bounce, smaller cap selling off. We'll talk about that in today's video. The 5-day change numbers really do speak to that. You can see essentially we're back to an even playing field here, where all of the major indices are down approximately 2.5% over the 5 trading days. We're below the 10 SMA, we're below the 50 SMA across the board. We are still above a 200 period simple moving average. Now, if we look at sectors here, you can see still basically a sea of red. Energy at the top of the list now, 5-day performance minus 1.28%, followed by biotech and tech. On the downside, we have real estate, we have materials and financials down anywhere from 3.5% to 5%. In terms of major markets, the VIX Volatility Index up 4%, followed by crude oil and TLT, which is the long bond. And on the downside, we saw a breakdown in metals, silver down almost 10% over the past 5 days. Natural gas on the second to worst spot. And then ACWX, which was doing well again and seeing some pressure this week. So let's jump into the charts. Let's try and make some sense of this action here. We're looking at TC 2000. We've got our equity market grid open. This is a weekly time frame, and we have our smart trend filter indicator applied to all of these charts. These are the color-coded dots that you see on your screen. Price and volume based indicator, and price itself is the white dashed lines. So if we look here at the long term, what I'm calling the long term time frame, this is a weekly chart, and all of the outlooks here for all of these markets are still bullish. They are still bullish. They are still constructive. Again, this looks out effectively several months in this view. And one thing you will notice, though, is that in all of these markets, we are as close to checking back to this smart trend filter in all of these markets as we ever have been, over the past 4 months or so. So basically, said another way, we have pulled back enough to let some of this, the longer term trends sort of catch up to price. And now, over the next week or two is going to be an interesting spot here if the market continues to pull back to start jeopardizing these longer term trends. And when these trends start breaking down, that's where the real trouble starts. Look no further than, the first quarter of this year, and you could look back even worse times, 2018, when we got that end of year drop. So we really don't want to see the long-term trends turn down. That's where things get really ugly. Now, on the daily chart, we've had them turn down. So we talked about this in our past videos here. We effectively had bearish readings here, certainly for the Nasdaq consistently since the 14th of September. So I'm looking at the top right chart right now. The Nasdaq here has been suspect, has been heaviest. And you can see that even with today's rebound and yesterday's turnaround, we are still below a bearish aligned smart trend filter here. So this basically still tells us that we need to be cautious here in the Nasdaq. We're going to look at the price action in just a moment, but on this outlook here, we still have a sell signal. Same thing for the S&P on the top left. This one's been a little more, kind of sideways neutral. We've seen more yellow prints in here, but still we are below a bearish smart trend filter reading, so that tells us we need to be cautious. The Russell 2000 in the bottom left, this was the bright spot. We talked about this last week. We got basically, half of this right in the sense of this is looking weak. This is looking like it can actually outperform and start to, help float this market higher or stabilize this market. And that quickly got flipped on its head this week with Monday's price action down 3.5% for small caps. A lot of this is, at influence here with the US dollar, among other things. But the turnaround that we saw on Monday definitely changed this outlook here. And you can see we're now in a sell signal on the IWM as well. ACWX, so this is the international markets, again, getting hit pretty hard yesterday thanks to, again, rising dollar amongst other things, really brought this back down to earth, and we got a sell signal here on the ACWX as well. So effectively what you have here on a daily chart is you have a unanimous bearish outlook, and on the weekly chart, you have a unanimous bullish outlook, right? So this is why I always like to sort of remind that time frame matters here, and how you're executing on this information just depends on your time frame and your strategy and really what you're looking to capture out of this market. So with that, let's look at some price action. Let's get a little bit tighter here in our analysis so we know what our trend outlook is. And if we look here at the S&P 500 daily chart, this is basically the roadmap that we drew out, and we essentially, had this little measured move that could get us down to around 3170 here in the S&P 500 if we were to make a full kind of second leg lower after breaking down. You can see with the price action that we saw yesterday, we started with that gap down. We got all the way down to about 3229 here in the S&P 500 before staging a very sharp recovery off of these lows. We rallied basically 1.5%, almost 2% off of the lows of the day into the close. And then we got some follow through to the upside here. So in the short term, if you're a very tactical, nimble trader that is day trading or looking for overnight swings or overnight opportunity, then you had a little bit of a window here at all of the clusters of sort of hammers that we saw yesterday in the market across individual stocks and indices. We saw lots of this movement where the market sold off aggressively intraday, but that selling pressure could not stick, and we saw a sharp reversal back to the upside. So again, nimble traders might be responding to that. You got your follow through day today. That's encouraging. We know that this is all in the context so far of that bear sort of outlook that we just looked at in this trend filter. So the price action will usually lead this type of indication here, right? Because this is a slightly longer term trend outlook, and this here is being very nimble on a bar by bar analysis. So if you're trying to front run a change of trend signal, or you're trying to be really early, then you're analyzing this intra bar or bar by bar analysis to get more sort of complete looks. So when I look at the S&P 500 here, I would use this level, this 3335 zone here, and say that this is the line in the sand here for this market. If we can start clearing back over this level, coming back into this consolidation and reclaiming this area here, I'd say that's a good win for the bulls. Might even indicate some type of intermediate term bottom. It is way too early to say that right now, but that's the type of thing I'd be looking at going into the end of the week, or seeing how this market sort of finishes out the week. If we can hold on to this rebound off of the lows and ideally get over there, that is encouraging. Now, the IWM basically had its script flipped on its head this week, because the IWM, remember, from last week actually closed up here at 153. It was already moving back into this old range. It was nowhere near these lows, and we talked about how breadth had improved, how the equal weight indices were faring better, small caps were coming alive, and these were all encouraging things. Notice we didn't have a bullish outlook last week here, right? Our trend filter wasn't green, so it wasn't giving us the all clear signal yet, but it was just the neutral signal with some encouraging price action, and that all sort of disappeared with Monday's aggressive gap down. This is a kind of a thrust off of a key level, is how I like to interpret it, and this is a meaningful day. And these are the dangers of trying to front run, for instance, a pure sort of trend change here. Sometimes you get in early, but sometimes you can get burned. And in this case, if you were trying to get in early here, you might have got burned here on this gap down. So again, in the very near term, it was encouraging again that today's session was weak initially. We got an aggressive rebound off of the lows. We have effectively an inside session that printed here today. So this can be saved. We're going to want to get back over basically yesterday's highs, fill this gap, and get back up into the 150s as quick as possible to save the small cap here from really sort of rolling over, entering a new strong bear trend. Right now, though, definitely in the penalty box. And with that, we had the Nasdaq 100, which was the weakest of everything, getting an aggressive rebound. So we got, again, this little mean reversion trade where tech came back to life, small cap, energy, financials, all that other stuff that makes up kind of the Russell 2000. Can lump biotech in there as well, sold off. So the Qs, you can see if we look at some price action here, have gotten back over 265 to 268. So this is this mattress of support, this area that we've been paying attention to. It is now back over this zone. That is encouraging. I like the fact that the Qs rebounded aggressively yesterday from their intraday lows. We got strong follow through today. We're back over this cluster of lows and this breakout level that happened in August. So this is encouraging. We'll need to see if the Qs can actually hold this now. So going forward, staying over 265 or so, that's going to be key into the end of the week. But this is good price action here, and we're kind of next stop is looking around 280 or so, which is where we failed twice in the past 2 weeks. Remember, NDX here is still showing bearish trend on this overall outlook here. Another day of price action like this, and we're probably going to go neutral, and then the real sort of battle begins. But that is really the landscape. We essentially got this nice equilibrium back in here where all the indices are down now, basically the same magnitude over the past week or so, and we're all sort of kind of seeing some encouraging, very short-term 2-day action, longer-term outlook here, looking out multiple weeks. Everything is still in broken trend sort of formations. So that is the outlook. That is the lay of the land right now. Let's look at some other markets here. If we go to the VIX, and we're going to stick with just daily trends here. You can see the VIX has rebounded. It got briefly over on Monday. It was up 7.5%, getting back into the upper 20s. Remember, everything, the way I like to kind of think about the VIX here is when I'm looking at the VIX, as I always like to remind, we're already at historically elevated levels, but a good line in the sand here is this 30 area, and if the VIX ever starts jumping over 30 intraday, or if it's closing over 30 intraday, that is where things can get really silly, and you have to be able to protect the downside. So be aware of a 30 VIX. We're off of it now. We're good distance away at this point, but risk happens fast. So if something like this happens where we get some intraday event, the VIX starts climbing, getting back over that level, then whether something's in a bullish trend or whatever the case is, it is very susceptible if the VIX starts, getting up to those levels. So that is something to consider. For now, again, tapering off is good. TLT kind of, sort of hanging out there. I want to talk about metals. So GLD and silver, you can see both printing bearish outlooks here on the daily chart. We posted some charts. We talked about gold and silver as being some interesting markets to watch right now because of the fact that they had been compressing in here for a couple of weeks, a couple of months almost. And you can see for GLD, it is just trying to hold on to the lower end here, arguably starting to break down. And this here, looks like the sellers want to continue to break this down. Give this to the end of the week if you want to give it a little more time. Could be some type of false breakout signal. Again, you could see the big drive off of the lows here in GLD yesterday, printed an inside session today. So for GLD, if it can very quickly get back over 180, then you have some interesting opportunity at the lower end of this range. But this is looking quite dangerous here after moving sideways and threatening some kind of vol expansion breakdown. Silver's pretty much the same thing, only getting just a much clearer kind of breakdown. We had 9% or I guess 7.5% closing down price yesterday. It had another inside day today, heavy volume coming in. This is what happens when basically you have 3 weeks, 4 weeks of going nowhere in a market, very tight ranges, you tend to get that vol expansion. In this case, it's going to the downside here in silver, so I think you got to be careful. More so in silver, GLD is kind of right on the fence. A couple of other names I want to talk about just to really sort of highlight. Actually, I think this grid here, see if I still have my stocks on here. Yeah, so Apple, Amazon, Google, Facebook here, huge components of basically every index at this point. You can see, again, all still in bear signals. Amazon getting very close to retesting it. But if we look at some of the price action here, yes, and Apple will start here. So look at the big turnaround it saw yesterday, follow through today. Again, near-term constructive signs. These could end up marking some bottoms. This could lead to some short intermediate term bottoms in a lot of these stocks and potentially markets. So we'll keep an open mind. But again, it is early when you start using just price action signals alone. You can see Amazon here, probably the most bullish of everything in the sense of this reversal and really strong follow through today. You can go right down the list. Facebook, a little more marginal here, and Google. That's not Google. A little Google here. You can see, again, turnaround, follow through, and all of these things are kind of stocks we want to be paying attention to because they obviously play a big influence. Last but not least, I'll end with some energy. So energy here down, let's see, 5% into Monday's gap down. Again, lots of overhead supply in here. This just looks like a really tough place to be. It had a little attempt last week, right? It was trying to get back over this zone. It was looking like it could potentially start to recover, but with this gap down, really back in the penalty box. Same thing with financials here. Aggressive gap down yesterday. Inside, well, no, it's not even inside session. Just more kind of volatility here today for financials. So both of these now kind of back into the penalty box, and you got to be careful in these areas, in these sectors. So that's it. That is the midweek recap. I think that's everything. Let's see on my notes if I can get to them. Yeah, pretty much everything back to equilibrium. And you certainly have a lot of volatility out there. So know your time frame, know your risks, and hopefully this video was helpful. As always, you can subscribe to our YouTube channel or follow us at The Trade Risk. Every Tuesday we do the midweek video like this. Tomorrow we'll share some trade ideas, and on Fridays is our long-form market analysis videos. Have a great rest of your day, and we'll see you in the next video update.